see that how to pass the journal entries. Remember, when you want to pass the journal entries, we have to remember the principles debit and credit rule. That means personal account, real account, nominal account. In the personal account, that means when we come across the names of companies or names, that means real natural persons or artificial persons. So then in that, when we come across those names, we have to use the debit and credit rule. Debit the receiver, credit the giver. Suppose if you come across the assets, properties of the business like a cash, like you have debtors like you have the investments, like you have the machinery or plant or buildings, land. When you come across, you have to use that rule, that is debit what comes in, credit what goes. Whatever is coming into the business, debit it. Whatever is going out, credit it. Then comes here the nominal account. The business deals with many expenses, revenue expense, incomes will be there. So that as per the nominal account, debit all expense and losses, credit all incomes and gains. These are the basic principles we have to follow. Without that one, we cannot write the journal entries. Now let us start our sum. Now here, past journal entries in the books of Dinesh. So we have to write down journal entries in the books of Dinesh for the month of April 2019. The heading we are supposed to write. And the journal entries means we have here 5 columns. Date, particulars, ledger folio, then debit amount and credit amount. So now the very first entry you read here, April 1st, Dinesh started business with cash. So Dinesh is starting business with cash. Cash is coming into the business. So debit what comes in, cash account debit. Who is giving this cash? Dinesh is giving. But Dinesh being an owner, we cannot write down his name. Instead of that, we have to write down capital. We have to write down capital. So the journal entry is cash account debit to Dinesh account. The date is 1/8/2019. Then you have the cash account debit. In the debit column, we write down 50,000. Again on the to capital account, we write in the credit side 50,000. Then narration means description. Description is that one why we are writing this journal entry. The description is being started business with cash. Once this entry is over, draw a line in the particulars column. Don't cover the debit and credit or date column. Just cover the particulars column with a margin. Draw a line. The next entry, April 2nd, sale of goods for cash. We are selling goods for cash. That means sale is an income. It comes as per nominal account. Debit all expenses and losses, credit all incomes and gains. Sale is an income, so we have to credit. So what we are receiving when we are selling cash, debit what comes in as per the real account. So cash is coming into the business. The journal entry is cash account debit to sales account. So we write down on this date, April 2nd date, we are writing cash account debit. Debit amount is 10,000. Then to sales account, credit amount is 10,000. Now the narration is being sold goods for cash. Then close this one, drawing a line in the particulars column. Next, on April 4th, purchase of goods for cash 15,000. You are buying goods for 15,000. So purchase comes under nominal account. The rule clearly states that debit all expenses and losses. When you are buying goods, it is a expenditure. So purchase account debit. Now the cash is going out. When you are buying something, cash is going out. So credit what goes out to cash account. So the entry is like this appears on the here 4/4/2019. Purchase account debit. We write down on the debit side 15,000. Then to cash account credit, we write down 15,000 credit. Then we write down the narration as being purchased goods for cash. Now the next entry is April 6th. Sold plant and machinery for cash. You are selling plant and machinery. So now machinery is going out. One asset is going out, the other asset is coming. One fixed asset is going out and the current asset is coming. Cash is coming in. So debit what comes in, credit what goes out. So machinery is going out, cash is coming in. So you write on cash account debit to plant and machinery account. You can write on machinery account also. So like this. On 6/4/2019, cash account debit to plant account credit. We write down the entry to plant account credit. Credit amount is 5,000. Then the narration is being plant and machinery sold. Now draw a line to separate the transaction. The next, April 10th, cash paid to Rahim. Rahim comes under personal account. Cash comes under real account. So as per the rule, debit the receiver, credit the giver. So now when we are paying cash to Rahim, Rahim is receiving. Debit the receiver, Rahim's account credit, debit. Then what is going out? Cash is going out. Credit what goes out? Cash account credit. So Rahim's account debit to cash account on 10th April. So we are writing the date 10th April. Then Rahim's account debit amount we are writing 3000 to cash account. Cash is going out. Cash account credit 3000 and the narration is being cash paid to Rahim and separate it with a line. The next one is April 14th, salaries paid. Here cash is implied. Cash is implied. When we are paying salaries, cash is going out to meet the expenditure. Salary comes under nominal account. Debit all expense losses, salaries account debit. How we are meeting the salary? By making payment through check, through cash. So cash is going out. So credit what goes out. The entry is, you write down on this date 14/4/2019. Then salaries account debit, we are writing 8000 to cash is going out to cash account credit 8000 and the narration is being paid salaries by cash. Remember, journal entries are very important because without knowing these entries we cannot move forward. So three things you have to remember, three rules: personal account, real account, nominal account. Personal account means debit the receiver, credit the giver. And real account means debit what comes in, credit what goes out. Then the nominal account is debit all expense losses, credit all incomes and gains. Thank you.